Hey guys, Mike here. So in today's video, I'm going to talk about China because I never talk about China, but the news coming out of there today was like reminiscent, almost like '08 in a way for me, okay? And I'm going to explain why, because, you know, obviously we know they've been cracking down on tech companies, education companies. Today they did casinos. Next week I heard it's going to be, cosmetics, for God's sakes. But the more important news coming out of there is about the real estate market, okay? If you don't know anything about Chinese real estate market, I've done a lot of reading on that in the last couple of days because, wow, you think New York's expensive? China, when it comes to price to earnings ratio of their people, oh my God, it makes New York look absolutely cheap. But the reason why this is important to us is because China is the second largest economy in the world. So when something happens in our economy, it affects the whole globe. When something happens in their economy, it can affect all the markets just the same, okay? Because they're huge, 1.3 billion people in their country, blah, blah, blah. And so that's why I want to put this out to you. This is not FUD. This is just actually what we call facts. And so I want to put this out there to you because we're going to see what happens, but it's a story I'm going to be following extremely close. And more importantly, I'll touch on the casinos, Alibaba, and also tell you exactly why China is doing this. And every day it seems like something new, and I don't think it's going to end anytime soon, okay? And I'll explain why to you on that. So we got a lot to cover, so let's just get right into this. And what you just saw was a failing project from a real estate developer. They basically ran out of money, couldn't complete the project. Another company came in, said, you know, this doesn't even meet the needs of the market right now. The needs have changed. So as you can see, they blew it up. I guess they're going to start over. But boy, can you imagine how much money that cost? But the thing to keep in mind is that company who failed is peanuts compared to the company we're about to talk about now, which is Evergrande, okay? It is the second largest real estate developer by sales in China and employs over 200,000 people. And here's their problems right now. And make sure you look at this very closely. And so Evergrande is $305 billion in debt, which they said they cannot pay, $7.4 billion in bonds due by 2022, 75% haircut likely for bondholders. That sucks. 1.5 million unfinished properties, 85% share price drop so far, and they're selling their new homes at a 25% discount just to get rid of them. And so you understand how much $305 billion is. AT&T had the most debt of any company in the world at $147 billion in 2020. This company has double that. And so understand that is enormous. You saw all the projects that are unfinished, right? It's 1.5 million people have deposits out there on these homes. They're having all kinds of sit-ins and protests right now about this over there, but most likely their money's gone. The bondholders, you can see right there, are going to get screwed. But right now, the reason I'm bringing this to you now, because they've been talking about this for 2 months, is because all of a sudden Bloomberg and others are reporting that the bankers and the Chinese government are meeting behind closed doors, trying to figure out how to head this off, because this company's been warning for a couple months now that most likely they're going under. They cannot afford this debt. And so they realize there's no way you can allow a company like this to go under. It would be really bad, okay? Really, really bad for their economy already, which, as I'll touch on the end, has already been struggling to begin with. And so, as we know, in '08, what happened to us? What does the real estate market affect? It's not like the stock market. Stock market goes down, you know, that's just invisible money, right? It's just the stock market. It goes right back up, okay? Real estate is a tangible asset, all right? These are tangible assets. There's a lot of loans everywhere, debt everywhere, into banks, individuals, other companies, all this stuff. And so, if this company goes down and you have all those unfinished projects, all those people being left out of work, the construction market, imagine all the construction companies. What are they going to be doing? Nothing, right? All those people will be out of work, and that just trickles down all the loans, shareholders, bondholders, all of that. The financial industry is affected. And so that's why this is a much bigger deal than the crackdown they're doing on tech stocks and everything else, okay? And that's why they're meeting behind closed doors trying to figure out what the hell to do. And so it's something to keep an eye on because, again, second largest economy in the world. It's the real estate market. And if, by the way, like I said before, just look it up on your phone there and you type in there, like, you know, China housing prices versus income per person. And usually you'll find a chart and it'll have New York at like number 9, and China's like the top 6 spots by a country mile. It's not even close. All right, how expensive it is for the prices versus household income over in China. And so, this is a big problem for them, and I think they know it now. And so, something we got to keep a very, very close eye on, because it will affect world markets if they allow this company to go under, and all that debt just goes away, right? And it falls in everybody's books and stuff. So, that's something to keep an eye on. The other reason why it's a big deal is because we got a lot of money in China, right? It's like $140 billion from companies of ours are invested over there. That's doubled since 2010. And it started like 55 billion and 60 billion, something like that. And so we keep investing more and more money over there. And so that will affect companies here as well. And so affect their share prices and things like that. So that's something else to keep an eye on as well. Now, the next thing we got to talk about, the casinos. You might notice the casino stocks are plummeting. And why? Because China came out and decided to regulate that as well. And Macau is the big one. Macau, you got to understand, is like the mecca for gambling. It is 6 times, their gambling sector is 6 times the size of Las Vegas. 80% of their revenue comes from, basically taxes on those casinos and things like that. 55% of their GDP comes from gambling. And so they really depend on gambling. And this shows you how much the Chinese government doesn't give a dang about share price, investors, or anything else, okay? Because remember, one thing you gotta understand is the Chinese communist government, they don't like gambling. They don't believe in it. They think it's bad for society. They don't like the fact that people who are trying to launder money are rolling it into their country, because this is the second favorite way organized crime syndicates to actually roll their illegal money and get it clean is through casinos. Number one way is real estate, just in case you were curious. And so, let's take a look at this real quick to understand what is happening.
Macau authorities say they're going to review the rules, and these licenses are 20 years old. The licenses are for the gaming companies such as the Wynn, the Sands, MGM, among others. Those are going to be expiring next June, but the officials said that as of today, they are kickstarting a 45-day process to assess the number of those licenses as well as the duration. They're also going to look if there's a need to install government representatives to oversee day-to-day operations, and then how to tighten supervision. So that could include pre-approvals for the transfer and distribution of profits to shareholders, and increasing voting shares for Macau permanent residents.
And what's interesting about Macau is it was already struggling even before, right? I mean, their gaming revenue growth, look at it from 2017, even before the crash, was already declining by like 20-something% there. And so you see where it's at now, which is way down there. And I heard a big trader say today, they said what this is a trade, right? Not an investment, because this energy is already dying, right? Why? Because younger generations don't go to brick and mortar casinos. They do DraftKings. They go with something like that where they can do it online. And so, this is just, a lot of people, some people bought last week. I'm talking big traders bought last week, they said. I saw them on TV. They came back on today and said, it's down 20%, I'm going to buy some more. Right? They're all in, trying to ramp it up, because it's so far down now. And they say it's just a short-term trade, not a long-term investment for them. And so, it's a gamble. Depending on your risk tolerance, yeah, you can definitely make a lot of money on it, right? But obviously, as you can see, the Chinese government is not playing around. And so, when, I think Las Vegas Sands got the worst, because what I understand is they sold all their casinos in Vegas, and 60% of their investments are going into Macau, right? So that's not good, because you just don't know whether or not they're really going to be able to get these licenses renewed, stuff like that. And the Chinese government don't care, right, what happens to these companies, especially since a lot of them are American companies. They definitely don't care. And so, that's something to watch out for. Be careful you're in it. But, you can definitely make a lot of money on a trade with this thing. And so, the other thing is Alibaba. I've never spoke about it, never done a video on it, not invested in it right now. But, you see the Chinese government is cracking down over and over. And this isn't new to Alibaba, right? And a lot of people are saying, well, it's undervalued, that's why we're investing. But I think the theme is getting missed out on here is what the Chinese government is actually doing, and have been doing, to Alibaba for over a year now. And you can see, starting back in 2020, obviously suspended their $37 billion stock market debut of their financial affiliate Ant Group, and then later fined them $2.75 billion for abusing its market dominance. Like, whatever that even means, I'm not sure, but that's what you get fined for over in China. And then, of course, they're paying out a third of their cash, $15.5 billion, which will be paid out by 2025, going to the Chinese government's campaign to foster equitable economic development. And I couldn't even imagine if a tech company in this country had to pay out a third of their cash, what would happen to the stock. I mean, it would just be just crushed, right? And that's what's happening to Alibaba. It's down like 50%. And so, but the one thing I don't think is getting enough attention is actually one competitive advantage they're going to lose now, and it's going to actually level the playing field a little with American companies finally, or somewhat, the best it can actually level it, I guess. And that's the fact that the Chinese government is cracking down on the labor disputes, right? Because they have something over there, the tech companies, it's like a 996 working program where they actually work their people from 9 a.m. to 9 p.m. 6 days a week. And they've been doing it for a long time. Jack Ma has been quoted as saying it was like the biggest blessing for tech companies, and it's what allowed Alibaba to grow so fast, is basically working their people to death, but then denying them overtime when they go to file for it. And, a lot of the courts have said this is illegal, you can't do this. Chinese government's starting to crack down and get involved in this as well, and saying it's like should be a 44-hour work week, because what this will allow is, or force, I guess I should say, the tech companies to do is to hire like 30% more staff than they have right now. And what does that do to your income statement? That's expenses. Expenses on hiring, expenses on training, expenses on more benefits got to be paid out. I'm assuming they pay their people benefits. I don't know because I don't live there. I'm just under the assumption they do that. And so, that right there, to me, that's a big deal. Nobody really talks about it, right? Because now you got a third of their cash gone. Now they're actually got to start paying their people, right? And hiring a bunch more people to actually do these jobs, okay? And so that's something to keep an eye out when you're looking at the financials and everything. Plus, let's be honest, I don't know how they're going to meet the reporting requirements here on the U.S. stock exchange. I have no idea how they're going to be opening their books up and all that stuff, or how they're going to meet that. That's another thing to keep an eye on, because I think the deregulation actually is a real deal. I think it's on the table, because, I just don't know how these companies are going to be able to meet the requirements. And maybe they will, hope they do, whatever, but that's a whole other thing to take into consideration. But I would definitely say watch the labor part, start looking at these income statements a lot more carefully to see if you see those expenses rising, because you're definitely going to see their cash flow decrease, because a third of it is going to be paid out in the next 4 years. And again, they'll continue to make money. But I think as you've seen, understand what the Chinese government is doing here. And this kind of leads me into why they're doing this. They're basically, one, it's a power grab from what I understand. What I've read, it's a communist party that runs it, but what does money do? Money creates power. China has created more billionaires in a faster pace than anybody in history. Okay, so you got a lot of rich people up here. That creates power and influence over the people in the country. The Communist Party is not like that, from my understanding, and so guess what you do? You take that money from those people and you distribute it amongst the other folks down below here in the lower income and middle income class, and they kind of like that, right? And so also you could have a little more influence on them, and you keep your power. That's the first thing I've read and seems to make sense to me. The other one is the government, these aren't fools. They can look at what's going on with the numbers, right? If all the money's up here, how are you going to grow the country? If all these people don't have any money. I mean, the Chinese president has been quoted as saying that 600 million citizens there live off a monthly income of $209. That's what they make, $209 a month. Okay, I don't know how much it costs to live in China, but that don't sound like a lot to me. Okay, and so they know if they can get the money from here to here, then obviously that's people spending more money, buying more homes, all that fun stuff, buying electric vehicles. Okay, and the numbers kind of prove themselves. They see the economy slowing down. It's been slowing down for a while now, even before the crash, or before COVID broke out and actually caused the crash, as you can see right here. And you can see right here by the chart, this is the GDP, and it's been falling ever since the 2008 crash, and at the end of 2019 it was at 6.2%. That's before the COVID crash, and so they see that. Then right here, look at these numbers that just came out. Look at the monthly retail sales since March 2021. Just going in the toilet. You can see what it was even before all this happened. And so now it's down to 2.5%. And their industrial growth numbers came out for August at 5.3%, projected at 5.8%. So that is slowing as well and not hitting the standard it needs to have. And so, they can see what's happening to their economy. And so, because all the money is flowed up, right? And all down here, you got a lot of people. By the way, does this sound familiar when you look at our country as far as the money flowing up to the top right there. And so they can see that. So how do you speed up, right? You get the money in those people's hands that spend it. The money, the people, they're going to be buying the houses and the cars and the groceries and all that stuff. And so I think that's the other reason they're really doing this. They're not being shy about it. I mean, they're actually telling people that's what they want to do. They want the smaller people to start their own businesses, right? That's what really gets an economy going. That's why America has been so great, because we have so many different entrepreneurs in this country, and it's still the number one employer is smaller businesses, not these gigantic corporations. And so, that's, a whole nother story and a whole nother video, but I think that's why they're doing this. I could be wrong, let me know your opinion about it, especially if you're a Chinese expert on their economy and stuff like that, let me know. But I at least want to put this out to you, especially about the real estate part, because that's something to keep a close eye on. And so that really will have a big effect on the global markets as a whole. If they do allow that company to fail, we shall see. And I don't put anything past the Chinese government, because you see what they're doing now. And so anyway, hope you like this. Hit the like, subscribe button if you did. Share the video. I really appreciate it. Give me your thoughts in the bottom. And of course, don't forget to hit that link down the bottom and open you up a BlockFi account where you can buy your Bitcoin and Ethereum, as well as earn interest up to 4.5% on your cryptocurrencies, 7.5% on your stable coins, and open up that cool new Bitcoin credit card they have there where you can earn Bitcoin on every purchase, as well as take out loans on your current cryptocurrencies that you own with BlockFi.